Air Canada has just made a decision that is shaking Canada's aviation industry. At first, the numbers looked normal. The company reported strong revenue, demand was still present, and losses were lower than expected. But behind those figures, something much bigger was happening. Air Canada suddenly suspended its full year 2026 financial outlook. In simple words, the airline is saying, we can no longer predict what comes next. And the main reason is fuel. Since the escalation between the United States and Iran, global oil markets have been under heavy pressure. Jet fuel prices have surged dramatically, and for an airline, fuel is not a small expense. It is one of the biggest costs of every single flight. That pressure has now forced Air Canada to cancel 4 seasonal routes earlier than planned. For the company, this is a financial decision. But for ordinary Canadians, it means disrupted vacations, changed bookings, longer routes, and possibly more expensive tickets. This is where the story becomes bigger than Air Canada. A political decision made in Washington is now affecting Canadian families, Canadian businesses, and Canada's entire travel sector. When tensions rise in the Middle East, oil traders react immediately. Prices climb, fuel becomes more expensive, and airlines are forced to protect themselves. Air Canada moved first, but it may not be the last. WestJet, Porter, and regional carriers are all facing the same fuel pressure. If costs remain high, more route cuts and fare increases could follow. The impact is also uneven across Canada. Energy-producing provinces may benefit from higher oil prices, but households, truckers, manufacturers, farmers, and travelers are paying the price. What helps one part of the economy hurts another. For Prime Minister Mark Carney, this creates a difficult situation. Canada cannot control global oil prices, but Canadian companies and citizens are feeling the consequences. Supporting airlines and consumers may help, but it could also put pressure on public finances. Doing nothing could allow the damage to spread. For travelers, the message is clear. Summer 2026 may not look like the summer they planned. Flights could become more expensive, routes may change, and flexibility will matter more than ever. Air Canada's announcement is not just an airline story. It is a warning sign. It shows how quickly global conflict can move from foreign policy headlines to airport terminals, family budgets, and daily life.